The cost of living is increasing, and I'm trying to figure out a way to not just save money for my personal benefit, but at the same time trying to maximize my investments. And I was wondering if there's something that can be done maybe around taxes to see if I can save some money. If that's the dilemma that you're facing and you're looking for an answer, well, you've come to the right episode because we're going to talk about that today. Hello everyone, and welcome back to another episode at Novarise Invest. And for those who are tuning in for the first time, this is your channel for financial education. So today we're going to talk about taxes, right? Because the cost of living, it's rising. Let's just face it, things are getting more expensive. So we need to get a little bit creative when it comes to ways to actually reduce our expenses. And taxes are an expense, whether you're doing business and even in your personal income, you do see your paycheck getting reduced every time Uncle Sam takes a chunk out of your paycheck. So in this video, what we're going to do, we're going to analyze a couple of states that you can possibly relocate so you can maximize those savings, whether it's for your personal benefit or maybe for your real estate portfolio. Now, the way we're going to do this prior to diving into the computer, we're going to go about a list of states, and within those states, you're going to see multiple categories. And those categories are going to give you a better depiction, a better picture as to why is it that they qualify to be in the top 10 or maybe the bottom 10, and use that information to your advantage so you can make an informed decision and help yourself maximize your money. So without further ado, let's just dive in straight into the computer. And here we are, and we're in the taxfoundation.org. For those who have been following me for quite some time, already know that I leverage the information in this site quite often. Whenever I talk about taxes, it's actually a great resource for those who want to look into that. I will make sure I'll leave the link on the description box down below so you can actually check it out. So let's scroll down. 2021 State Business Tax Climate Index, right? So before we dive in and we talk about, the best states or the worst states to maximize your saving on taxes, let's try to understand how they actually arrive at the calculations, right? So on their methodology, they calculated the tax climate based on these different categories. So they talk about corporate tax, individual income tax, sales tax, property tax, and unemployment insurance taxes. Why is it important to look at all different type of taxes overall? Because each state, if you come to think about it, is composed of multiple tax components, so to speak, right? So you as an individual, you have to pay taxes. Businesses, they have to pay taxes at the corporate level. Every time there is a sale for a product, there is a sale tax to it. If you own real estate, chances are you have to pay property taxes, whether you are a homeowner or a real estate investor. And of course, if you do employ people, you also have to pay for an unemployment insurance tax. So the way they did the calculation was that they incorporated all of this all together, and then they ended up giving us an overall as to, what makes up the best states or the most tax-friendly state, so to speak, versus the least tax-friendly state. So let's just go one by one so that you can understand what goes into one of these components. So let's start off with the corporate tax. So the component measures the impact of each state's principal tax on business activity and accounts for 20.8% of each state's local score. Okay? It's well established that the extent of the business taxation can affect the business level of economic activity within a state. This is something that it's very important for you to consider, because think about this way. If the corporate taxes are very high, what do you think it's going to happen? Companies are either going to move their operations or their headquarters or whatever to a different state, or worse, they're going to wind up moving it overseas, like we've been seeing with Apple and all of these big companies who manufacture their products elsewhere. They manufacture overseas before they even bring it back here into the States. So Apple, it's a great example of those. And, if you do own a small business and you want to operate in the States, you want to make sure you take that into account, because, hey, if you have a really high corporate tax, it's going to eat into your profit. And that translates to either less production, or it can translate to less chances of you hiring more people, because, hey, you have to pay Uncle Sam, right? So make sure you look into, how important and corporate taxation is in your business. Now, moving along to individual income tax, that's also very important because you and all of us as an individual, we have to pay our income taxes. So the individual income tax component, it's accounting for 30.5% of each state's total index score. And it is important to businesses because a significant number of businesses, including sole proprietorship, partnerships, and S corporations, report their income through their individual income tax code. So eventually, as we explore the states, you're gonna sort of like get a better understanding as to why certain people reach a certain age, and after they have done whatever they could with their career and they're getting ready for the retirement, they wind up moving to quote unquote cheaper states because they do really want to maximize whatever amount of money they have saved for the retirement, as opposed to giving it all away to Uncle Sam in their income taxes, right? So very important to keep that in mind. Then the next factor that you have to take into account is sales tax, right? So as part of their index, part of their scoring was based on the sales tax, and the sales tax is accounting for 24.4% of each state's index score. So for those who don't know what a sales tax is, and like I mentioned earlier, the type of sales tax familiar to the taxpayer, in this case, people like you and I, is a tax levied on the purchase price of a good at the point of sale. So let's say every time you go to the mall and you buy some clothes, some new clothes, maybe you're buying some sweaters, it's the winter and you need additional layers and stuff like that. Every time you make a purchase, you will see that there's a sales tax in your receipt, unless you're part of one of those states where we're about to cover pretty soon. So we already cover sales tax. I think there's two more that we need to get over. The next one is property taxes. So the property tax component, it's very important because it accounts for 14.8% of each state's index score. So if you own property, regardless of whether you're a homeowner or a real estate investor, you have to consider, property taxes. And there's no two ways about it, because property taxes need to exist because the states, they use that money to fix the roads, to pay for the public schools, for the police officers, the firefighters, anything that involves with public service that goes into the well-being on that state, whether you reside or whether you invest in it, gets collected through property taxes. So in the event that you are trying to maximize your income or that you're trying to maximize your investments, property taxes is also another factor that you have to take into consideration when you're considering states to move into, or perhaps states to simply go and invest. Now, the next item that I wanted to talk about, it's unemployment insurance taxes. So for those who don't know, unemployment insurance is a social insurance program jointly operated by the federal and state governments. Taxes are paid by employers into the UI program, the unemployment insurance program, to finance benefits for workers recently employed. So if you do have a company, you are responsible for paying unemployment insurance if you have staff. If you don't hire anybody, then you're good to go. But if you do hire personnel, then that's something that you need to factor in the decision making as to, hey, what will be the best states for you? Now that you know this, let's just go and check out the list. So the Tax Foundation State Business Tax Climate Index enable business leaders, government policymakers, and taxpayers to gauge how their state tax system compare. While there are many ways to show how much is collected in taxes by state governments, the index is designed to show how well states structure their tax system and provides a roadmap for improvement. So among the list of the top 10 best states this year are Wyoming, South Dakota, Alaska, Florida, Montana, we have New Hampshire, Nevada, Utah, Indiana, and North Carolina. So if you come to think of it, right? And they actually explain it right here. The absence of a major tax is a common factor among many of the top 10 states. Property taxes and unemployment insurance taxes are levied in every state, but there are several states that do without one or more of the major taxes. That is, the corporate income tax, the individual income tax, or the sales tax. Nevada, South Dakota, and Wyoming have no corporate tax or individual income tax, though Nevada imposes gross receipts sales. Alaska has no individual income or state level sales tax, and Florida has no individual income tax. That's why you see so many retirees moving or migrating down to Florida. Aside from the nice weather and the sun, they go down there because they're trying to maximize their retirement income. And if you are an investor, hey, might as well, right? And New Hampshire and Montana, they have no sales tax, right? Again, by this, the article doesn't mean that a state cannot rank in the top 10 while levying all the major taxes, because, for example, states like Indiana, North Carolina, and Utah, they levy all of their major tax types. However, they do it in low rates compared to all the other states, right? So again, just to reiterate, this is a list of the best 10 states or the top 10 tax-friendly states, so to speak, if you want to put it that way. And the fact that they are in the top 10 doesn't mean you don't have to pay taxes. It just simply means that either one of these have more beneficial rates for you. Some of them might be you don't have to pay for them, but then some overall could include all type of taxes altogether, but then you're paying a much lower rate in comparison to all the other states. Now, at the other end of the spectrum, we also have the 10 lowest rank or the worst states this year in terms of taxes. But before we go and we check them out, if you're enjoying this episode, do not forget to hit the like button right here at the bottom. And also, please share this information with other people like you who are actually looking for information of this kind, who you know that will benefit from this type of information. So moving along, we have the 10 lowest rank or worst states on this year in 2021. And those are Alabama, we have Louisiana, Vermont, Maryland, Arkansas, Minnesota, Connecticut, New York, California, and New Jersey. So this last three here on the list shouldn't be a surprise for anybody. I lived in New York and we pay a lot of taxes, especially if you have a business. And if you live in New York City, worse. Like we're paying, federal, we're paying state, and we also have to pay a city tax. Same thing with California. Things are rougher on there. And then same thing with New Jersey. But of course, the trade-off is maybe you have other opportunities that you feel that you might benefit more in living in the States versus being in other states. But that's something for you to consider. The key component here is educating yourself so that you know what the availabilities are, what are the best days, which ones are the worst, and then just make an informed decision. Let's see here. The states in the bottom 10 tend to have a number of afflictions in common: complex, non-neutral taxes with comparatively high rates. New Jersey, for example, is hampered by some of the highest property tax burdens in the country, has the second highest rate of corporate and individual income taxes in the country, and a particularly aggressive treatment of international income, levies an inheritance tax, and maintains some of the nation's worst structure individual income taxes. For those who want to find out more about inheritance tax, there's a hyperlink right here as well, so feel free to check it out and read and learn more about the subject. And now let's just compare the two lists side by side on the same map. So on the blue, we have the 10 best business tax climates. So we have Florida, North Carolina, Indiana, we have Nevada. And on the gray side, then we have the worst ones. We have Alabama, Louisiana, California, New York. And if for whatever reason you don't see your state here, but you still want to find out, hey, where are you standing in terms of taxes? There's a big table right here following the map that you can actually use to check out where your state stands, whether, on the overall level, on the corporate level, individual, sales, property, you name it, right? Whichever ranking it's relevant to you, you can actually check it out here on this table. All you got to do, let's say you live in Georgia, you want to know where Georgia stands, that's number 31 on the list. Just click on it and you will get a new table popping up that's going to give you the details of how everything was broken down into and where it will stand overall in all 50 states. Okay. And that's pretty much it. That's all I have for you today. Hopefully you found the content very valuable. And if you did, do not forget to share the love and share this episode with others like you who are looking for information of this kind. And while I still have you here, once again, do not forget to hit the like button and also check out this episode right here. That's going to help you complement everything you just learned today. And without further ado, I'll see you guys soon. Take care. Bye-bye.